Thank you for joining the Film and Roll-Up Associates Municipal Market Update for the week of June 1st, 2020. For the last 2 weeks, I would characterize the municipal market as relatively calm. We are seeing many different types of credits get done, and that was one of the things we were concerned about when we first started doing some of these presentations, was that it was very limited and some of the non-rated type of deals were not able to get into the market. But with that, let's get into the numbers. On this page, we're showing the range the MMD has been for each one of these maturities. And so hopefully what you notice is that MMD is in the red line is at the very bottom of all those. So the 2005 until today is considered a relatively low interest rate environment to begin with. In addition to that, that red line is showing that we are at the very low levels of that. So if we just take a minute to go back to that 30-year though, 1.65. So for the AAA MMD, an investor is getting a return of 1.65. And so first thing to think about is with how much borrowing that the federal government has done to help support the economy during the COVID-19 difficult times that we're having, is should we have inflation? And there's an article in the Wall Street Journal over the weekend that says gold signals inflationary concerns and bonds don't. So when it comes to municipal bonds, though, there's one other thing to think about, is why these bond investors might not be thinking there's going to be a lot of inflation. Maybe they think the federal government needs to keep rates low to be able to pay back that debt. But another thing I think maybe at play with municipal bonds is to support all the debt that's been issued, our marginal tax rate's going to have to go up. And if marginal tax rates go up, then these bonds have a greater value because these bonds are both federally and state tax exempt. So that's one of the things to think about when we look at the MMD and how low it is on those long bonds, is that may be a factor that investors are looking at. On the next page, we are looking at the 10-year Treasury and the 10-year MMD and how they have compared to each other over time. Generally, the green line represents the 10-year Treasury, and that has been slightly over the 10-year MMD. One of the key factors in that is that the 10-year Treasury only gets the state exemption, where municipal bonds get both the state and federal exemption. So if you have a similar credit, an investor, and if they're the same rates, an investor would prefer to own the municipal bond over the Treasury. Now that trend broke at the beginning of March when you see that spike. That spike corresponds to the municipal bond outflows that I showed you in previous weeks, and I'll show you again in a minute. But when money was flowing out of the municipal bond funds, rates spiked. Investors were putting their money into places like treasuries or other cash equivalents. And then now that we've seen that moderate, you've seen those municipal bond rates continue to trend lower. But we haven't got back to the point where the municipal bond rates are lower than treasuries. So investors are still saying, I'll sacrifice that differential by not having that state exemption rather than have a municipal bond in a lot of cases here. On the next page, inflows and outflows again. This is moderated. This is something I've told you that we need to monitor. And you can see that huge spike lower in red there, and that corresponds to the increase in rates. But now we've had a modest amount of money flowing back in, which I think has been a big factor in creating a lot of the calm in the municipal market. On the next page, I'm showing, so I showed you the demand. Now I showed you the demand, and now I'm showing you the supply of bonds that are coming forward. The red line represents the 2018 average. That brown line represents 2019, and finally that green line represents 2020. So not a tremendous amount more than the last 2 years, but more volume has come in 2020, and that's expected to continue a bit. But since we have had a modest amount of inflows into the funds, it feels like that is much more manageable than we saw mass amounts of money flowing out. This page here, this is I usually describe this by saying, look at the green bar charts at the bottom. I'm not able to do that today because there are no green bars. What those green bars represent is the percentage of time each one of these maturities has had lower interest rates. These maturities, other than the 1 year that has 0.79, we haven't seen rates this low. And so for the highest rated credits, we are seeing near absolute lows going back to 1998 in municipal rates. Now, I showed you credit spreads last week. I don't have it this week, and I'll show it to you next week. But credit spreads have widened. So investors are saying for the AAA, we'll take the lowest yields ever or near ever. For the AA, we'll get close to that. The single A, we need a bit more yield to do so. So if the AAA MMD stays this low, investors are likely to start looking towards lesser credits, the AA, single A, the triple B category, and those will start to hopefully have their yields drive down as well. But that hasn't happened yet, so investors are still being very risk averse, but I would expect that trend to continue, which creates more opportunity in the municipal bond market. On this page, I show you the economic indicators coming up, and there are a few that we should all monitor. If these come in different than what some of the projections are or expectations are, it'll certainly have an impact on the market. I think during this period in time now, this slide is not as important as it is in other instances because there's just so much news. If we hear about a vaccination possibility with one company, that can be a key driver. If we hear about a spike in infection rates of COVID-19 in other areas, that can be a big factor. It's very difficult in the last few months to say that these are certainly very important ones, but there's other ones that are having a huge influence on the market. So with that, once again, I have the registered municipal advisors here for Film and Roll-Up. I encourage you to reach out to any one of them for additional detail. I thank you for your time. I hope you stay safe. I look forward to talking with you again on June 15th. Another thing you're going to see from us on our Film and Roll-Up channel is we are going to have public finance conversations. And we have sought out some of the industry leaders, and they're going to take some time with us and just talk a bit about the industry and some of the things they've seen in their career. And I'm very thankful to all them. And I hope you find it interesting, and we'll take a look at that as well. So once again, thank you.